All right, what's up, y'all? This is Uneducated Yogi, One Family Investing. Thank you for being here today. Okay, I don't know if I need to do this or not, but we're going to do it in this video. So, One Family Investing, we invest here, we learn here, and we make profit. All right, so we'll be talking, or that's what we do here. I do have a newsletter that you can sign up for, but right now the site is down. So actually, if you want to test this out, you can go to onefamily.podia.com and see if you could still sign up for the newsletter. Here, there it is. There'll be a link in the YouTube description. So we're gonna go over some beginner stuff, investment notes for beginners. So I follow this guy. His name is Wallstreet Trapper, and I just be straight up with y'all. Again, history. So everything that it was in my other YouTube channel. Everything that I'm about to go over actually came from a video right here. So everything I'm going over came from this video. So this is somebody who has a nice following. He has 488,000 subscribers. So I'm not as big as him. But what I do again is One Family Investing. We get information from everywhere and we present it to you all so that you can get ahead of the game without needing to do all the research yourself. So that's what I'm here for. And what's cool about this particular video is that a lot of the stuff he was talking about, this is what I tell my friends anyways. So you guys are in good hands. I haven't been in the game like some of these people I'm researching, but there's a mindset that we're more focused on rather than thinking like, do I know how to do this yet? Because we can read books and everything like that, but what we can't read about is having a stomach for risk. What we can't read about is knowing how to read our risk to reward ratio. What we can't read about and learn through reading is we can't understand just most of starting anything and doing anything is being able to appreciate the process, have patience, learn about it, yes, and then while you're executing you got to have macro patience, but micro, you want to move fast. So there was a video he called it Investing 101, Stop Losing Money with These Mistakes. So he's been doing this for a while. So this is some mistakes that he's seen. And actually only the first one is the one that I didn't think I would mention. That's because I don't even think about penny stocks, to be honest, but no penny stocks. All that means is like, there's a lot of stocks out there that's really, really cheap. Don't think like I'm going to get in the game and I need to buy cheap stocks. You're not trying to buy cheap stocks. You're trying to buy smart stocks. And we'll talk more about that. So no penny stocks is one of the first rules or games that you need to understand while investing. Only invest in S&P 500 companies that are in the NASDAQ and the Dow Jones. And that's some good advice. That's what I tell my friends. Invest in companies that you know first rather than just investing in anything. Basically my first companies, one of them was, as you guys know now, Tesla was one of my first companies that I really, really invested in. Right here, Tesla. As far as me making my personal investments, but all these investments that I made, some of these are free stocks, but Target, I know Target. Some of these are gold stocks. NEO is the Tesla for China. it's an EV company in China. I invested in that one. SoftBank. So I understand some of these companies. I can do more research on SoftBank and Neo, but I understand like the market attention and how important international market investing is. I'll talk about that more later. But just like there was a time when I was going to invest in land in Nigeria. Now, some of my friends probably go, "You're crazy. Why you're not even in Nigeria?" The opportunity that was, man, it was such a nice opportunity. You invest a little bit, you're helping build a country's foundation by investing. So I wasn't gonna get mad returns on it, but man, that's a lot of good karma. Like you're helping a country build from ground up, and what you're doing is you're supplying them with some funds, and while they're using that funds to build their land, harvest things by tractors, you're getting paid on the back end, and then when they're done with all that, you get all of it back. So man, it was such a nice investment opportunity. But anyways, so international investing. Apple, I know Apple, and some of these other ones are free. So invest in companies that you know. Okay, so stick to companies that are on the S&P 500. Those are the top 500 companies in the U.S. market. So the top 500 companies, they get put on there. Number 2, if this loads properly. Okay. Don't look for quick flips. No day trading. As a beginner, you should not be day trading unless you did a lot of studying. Like if you didn't do studying and learning how to day trade properly, learning how to read candlesticks. If I just said candlesticks and you don't know how to read candlesticks, you should not be day trading unless you have some like mad analytical skills that I don't know about. But that, for instance, is this right here. So day traders, what they do is they come in here, they say, oh, well, the market's going to be volatile. So because this up and down movement, I'm going to day trade. I'm going to try to make some gains from here down to here, or I'm going to make some gains from down here to up here, sorry. So they'll look at the bottom and say, hey, I'm going to play from the bottom to the top, and I'm going to make whatever gains, right? See these percentages and stuff like that. So what day traders are doing, they're trying to make gains like that, okay? I'll talk about that more in a second. But no day trading for beginners. Don't look for companies to make money fast. So even with like these meme coins and, NFTs blew up for a second, like people were trying to figure out the fast way to make some money. That's the best way to lose money. And we don't want to do that. We don't teach that at One Family Investing. What we share is that we look for companies that you can invest in, and what that means is a company that you feel confident with holding their stocks for 3 to 5 years. Okay. So if you don't see yourself being able to hold a stock for 3 to 5 years and be confident in it, then don't get it right now. It's okay. There's a lot of companies out there. There is a company that you don't mind investing in like that, but sometimes we got to do research. And again, we're here. I share stocks. I share picks. So let's keep moving. Okay, so there's 7 strategies of trading. One of them is the day trading, right? So no matter what I say, some of y'all gonna see this video and be like, well, it ain't fancy enough for me to listen to this guy, but he got some good advice. And I'm still gonna go out there and trade. I actually have friends right now who I show them what type of profits I'm making, and they'll still go buy stocks without consulting. We have to consult each other. What people are putting out on the internet, and when you just have people close to you, consult. So 7 strategies of trading, and we'll see which ones will fit for us. Okay, so as a beginner, think about which one of these would I really want to do. So a day trader, the time frame for day traders are seconds to hours. So the market opens, New York time, what is it, 8:30 something, I don't know, 7 something, whatever. the market opens, positions close by the end of the day. So you open up a position. Let's say you want to buy a Tesla stock. You see it open at $200 in the morning, and then you want to sell it within the next hour or two. You gain profits, and you sell it at 205. So you make $5 per stock that you have. So the goal is profit from small price moves. The tool is technical analysis, candlestick patterns, and level 2 data. So just like on this other chart, what I showed y'all, yeah, you can learn how to read this anytime. So this is called the moving averages. And these lines, again, I did a lot of research not a lot, but I did enough research to understand that when this red, yellow, and green, like the stoplight. So think about a stoplight. Every time you see this red, yellow, and green, and when it's in order like that, you'll see that the market kind of has a move up. So right here, a move up, red, yellow, green. There was a move up. Red, yellow, green is kind of fighting in there, but there was a move up. It has to be in that order. If it's the other way, green, yellow, red, it's a move down. Okay? So you can read charts like this. So this is called technical analysis. Red, yellow, green. Look how the red stayed on top for a lot. Look at that. So there's ways to read the market. But if you don't know how to do that properly on a day-to-day, then you shouldn't be doing this. This is called a 1-minute chart with the candlesticks. And just a little bit ago, it was right here. So we'll come back. We'll leave this here. So right now, 9:21 or 7:27. We'll leave that there. Okay. We'll come back to it. See what happens. So that's a day trader. The skill level is high. You need to have a high skill level. You need to be able to make fast decisions, and making and market knowledge is needed. Fast decision making and market knowledge is needed. Okay. So this is a high risk game. Day trading is a high risk game, potential for fast gains, but also quick losses. Okay. I had plenty of friends already before I started to do one family investing, but they knew that I had some investment, whatever background. So they share with me, but I have friends who lost, $10,000 here, $2,000 here, just by trying to figure out how to get the fast money. Don't do it. Don't do it. Just comment, write me, and then I'll share with you my honest opinions. I'll find other people. My job here, our job here at One Family Investing is to get you to make profit from what you're investing in. We want you to make profit for what you're investing in, but you got to learn the game and not just take random risk. You don't have to take random risk. So that's day trading. That's one. So another strategy is called swing trading. Swing trading time frame is a few days to a few weeks. So you'll buy something, and then you'll understand it maybe in a week or two that it's going to go up or it's going to go down, and then you base your strategy off of that. The goal is to catch the swing in the market from short-term trends or breakouts. Analysis. The skill level is moderate. Less stressful than day trading, but still active. So yes, less stressful than day trading. Day trading is the most stressful. It's like a lot going on. So this is less. It's like, okay, well, I read something in the news, or I heard something come up by the CEO of this company, and I can understand that it's going to do this in about a week or two. I'm betting on it. And you bet on it. The risk is medium. The market news events can impact trades overnight. So again, that's, you just pay attention. And swing trading, less risky, but still risky. So the example is like holding Nvidia stock after an earnings report, expecting a continued rally. So you check out a stock, you hear that it started to do good. GameStop recently had a thing like this, but it lasted not that long. It went up. People thought it was going to keep going, so they bought in, and then they lost a lot of money. Again, one of my friends actually tried to play that one without calling. Just use your resources, okay? So that was not, the GameStop one wasn't a good move. This Nvidia stock, if you heard about it recently, it wasn't a good time to buy when it had hype. But there are some that it's good to buy when it has hype. Okay. Next strategy is position trading. The time frame is weeks to months, sometimes years. The goal is to ride out long-term trends. The tool is mostly fundamental analysis, macro trends. So you find a company and you notice, hey, I would love to get this stock because I'm seeing it grow from wherever it's at. Like let's say there's a company out there called Saya. It's still out there. I really like this company. It's not like a trading company, but let's just say if this person's company, I've seen this company grow from on Instagram from not so many followers and not so much attention to a lot of attention and a lot of followers, and it just keeps growing. And it's a wonderful company. Like as I'm seeing that, I'm investing in that company if it's on the market, because I can understand the game that person's in, and I understand the CEO. The CEO is honest. He's a hard worker. He's, he engages with his audience. So anyone who follows him is organic. So there's a lot of good things about if that person's company was on the market, I'm buying it, bro. Because in the long term, I know it's going to grow based off of what I just said. But I'll keep checking in. I don't just say, oh yeah, I'm just gonna trust it and then leave. So tools, okay, skill level is low to moderate, requires patience and research. That's it. Patience and research. Again, that macro trends, the macro patience is very important. The risk is lower, more stable than short-term trading. An example is buying Apple stock, expecting strong long-term growth from a new product line. So yeah, self-explanatory. Hey, there's going to be a new iPhone, whatever coming out, or a new device coming out. Oh, okay. Well, let me buy Apple stock right now, because when they start to release that in a month, I know the stock is going to do this. So that's buying based off of expecting a trend or something. So position trading, that's called position trading. The fourth one is scalping. Okay. I recently started hearing the word scalping. I understood it, but it's more of a new strategy that I started to understand the language of it. So the time frame, seconds to minutes. It's kind of like day trading from how I understand it. The goal is to make dozens or hundreds of small profits throughout the day. So it's like day trading. You're trading based off of the movement of these candlesticks. All right, so y'all saw these candlesticks, like it was right down here. It was around that 20 whatever mark, and now all this activity. So I'm somebody who understands candlesticks, and I would be able to read, depending on what's happening with these, I can understand if this is going to keep going down or go up. And there's just ways to read it. Again, I mean, I made a YouTube playlist to where if you want to learn the basics of candlestick reading, I'll send it to you. Just ask. I got you. Put in a comment. I'll share it in my next video or whatever, if that's something that's interesting to y'all. Okay, so the tool is high-speed execution, real-time data. High-speed execution, and they're moving with it. Again, it's kind of like day trading. Skill level, expert. You need to be very fast with your reflexes and laser focus. The risk is very, very high. Tight spreads, high volume is needed. Okay, so an example is making 10 cents per share profits repeatedly, adding up over many trades. And yeah, I mean, once you learn the game, you'll understand what all that means, but it's a very nice strategy. When you learn it, you can make a couple $100 in 30 minutes to an hour. It's pretty freaking nice. Couple hundred, couple thousand, whatever you can afford. Okay, so 5 strategy is momentum trading. Hours to days is a time frame. The goal is to jump in on a stock, making big moves and ride the wave. Just how it sounds, volume indicators is needed, moving averages, the news catalyst. So, again, moving indicator, like you're going to be a technical reader, a fundamental person, or research person, type of thing. So So moderate to high skill level is needed. You need to catch the wave early. So again, something is happening. I've been focused. I've been following this stock for a little bit, understanding like how it works, understanding the CEO. Oh, I know this is about to be moving soon. Let me jump in. The GameStop one is a momentum trading, right? So if people were paying attention, they could have made a nice little profit real quick, and then just get out. So the ones who stay in, they lost. But if you caught it in the beginning, got in, you could make a couple bucks and get out. The risk is medium to high. FOMO can lead to chasing trades. Don't want that. Do not want that. Example, buying a biotech stock after FDA approval news, riding the momentum for a few days. Following news, the news affects stocks. I'll leave it like that. It's like when tariffs came out, it affected the stock market. Okay, sixth strategy is algorithmic and quantitative trading. Time frame is any depending on the strategy coded. So this is like I just learned about this, man. This is so freaking cool. With AI right now, people are using AI to make trades for them, and it works. It's an actual field in its own. It's an industry in its own. I know one person, not personally, but I found him on the YouTubeverse. That's what he does. His specialty is AI trading. He'll make a bot and then he'll use it to trade. He'll make a bot, he'll use it to trade. And he gives us like all this the phrases that he uses to make the trades possible. So that's pretty cool. It's an industry in itself. So the goal is to use computer algorithms to trade automatically. Coding skills, data sets, back testing platforms. So those are the tools needed. The skill is high because you need to really know this stuff, man. So you need some coding experience, maybe some math and market knowledge needed. Not all that is needed anymore with AI. You don't need to know coding. You don't really need to know math. You just need to know how to talk to the dang AI machine, and it does it. All right, it's pretty tight. The risk depends on the system, good for automation at scale. An example is an algorithm that buys and sells based on RSI or MACD conditions. I don't even know what those are. We'll learn that later. Okay, but the algorithmic trading, an example is if you were a coder before AI, people would code in stuff and let the algorithm make the trades. But with AI, you can just talk to, like, you just give it some instructions. It figures it out for you. It's pretty cool. I've seen some like that. I haven't tried it myself yet, but been following some folks. Again, that's what we do here. I follow them for you. I'll bring out some cool stuff later on it. The last strategy is to buy and hold. Investing. Time frame is years. The goal is to build wealth over time through appreciation and dividends. Yeah, boy, that's what we're doing over here. So the tools is fundamental analysis and economic indicators. Skill level beginner friendly. There it is right there, my people. Beginner friendly. This skill level, this is the one you want to be doing as a beginner, okay? You want to be buying and holding and learning your risk tolerance, learning how, dividends work, for instance. Dividends right here, learning how dividends work, learning how to follow a company in 3 to 5 year increments to understand how it's working. So yeah, the skill level, beginner friendly. The risk is low. If diversified and long term. So if you're thinking long term and you're diversified, it's the least risky. And that's what we're teaching here at One Family Investing. Okay. Example is buying shares in index ETFs or blue chip companies like Microsoft and just holding. What I say in the beginning of this, buy companies that you know. You know Microsoft. Buy companies that you know. You know Uber. Buy companies that you know. You know Walmart. Costco, Amazon, You know these companies. So we buy those companies, and then ETFs. I went over ETFs, but indexes or a stock that has a bunch of companies in it. The S&P 500 is called ETF. The S&P 500 has the top 500 companies in the U.S. That's an ETF. Go buy that. Put $20 in it. Put $40 and just watch it and like learn how to let your investment work. So that's the one that we teach beginners, because this is we're growing this portfolio together, this public portfolio. So those are the 7 strategies. And if you have any questions about those 7 strategies, feel free to, again, hit me up. Oh, there's a lot going on back there. Hit me up and let me know. Okay. And last but not least, don't put your money in the market you can't afford to lose, okay? And I have a problem with this, but I know my risk tolerance, right? When I first started investing, and I invested in other stuff as well. Thought it was over there. Like when I made this investment, if it shows up, when I made this investment, not everybody likes that I invest with Grant Cardone for some reason, because like there's some controversy around my boy's name. You know what I'm saying? Grant Cardone, it is what it is. But I can't be mad at him, because for me, he did what he said he was going to do. For me, so you see this 4/15/2025. I've been getting paid monthly distribution. These are like dividends from Cardone Capital, Cardone Equity Fund 5. I've been consistently being paid. Okay. So I invested $6,000. So I'm being open with y'all. I don't know if I necessarily had that just free and available, but I got into an accident instead of, and I got some funds back. And I actually went behind my partner's back to actually make this happen, because she has less risk tolerance than me, and it's like that's the kids' food money and stuff. So I did this behind her back, but we're profiting since 2019. We've made $1,500, and it's going to just keep going. And the percentage that he said I was going to be making, I've been making it. So I'm just not wrapped up into all of the controversy stuff. But it's like, well, he's taxing you, and and I get all that. So not every investment on the front end is good. Yes, you do have to check the back end. I want to put that out. We have to check the back end. But everything that I was due, I've been getting. It's about 6% a year, and your savings account doesn't do that. If I left the $6,000 in my savings account, extra money, you know what I'm saying? And then this is connected to properties, and when the properties get sold, we make another profit there. So, but I had a lump sum. So this is just saying, don't invest more than what you can, that you're willing to lose, basically. Hope is not a strategy. It's a gamble. So we're not just putting stuff in because of hope. We're doing it because there's some actual knowledge and some understanding behind what we're doing. And I promise you, everything I've done is come from that space. But yeah, you keep learning, you keep growing. So some people, they'll judge you just because you started something, just because you don't have it perfectly down. But that's the point. You learn by doing as well. You just don't go crazy. You do little with little. So by only what you understand, by companies or is interested in looking up, do not go all in. Scaling is key. Little by little, $20 here, $20 here, $20 here, and so on and so forth. The point is to have a plan on how you want to buy stocks, okay? And again, we'll be talking about that more and more, because there's strategies in which to do this to where you can be making profit. And check out the last video where I talked about dollar cost average, because even when when the stock market is not looking so good, you can still make profit by doing little by little. As it's even going down, you still buy, because once it starts going back up, you still buy. There's a strategy. Again, check that one out in my last video. And then don't go out buying like a crazy amount of stocks. Again, I had a friend, he was like, I'm going to buy all these stocks, Yogi. And I told him, like, don't do that. Just think about, 10 to 15 stocks that you want. Don't think about like 20, 30. Just think about 10 to 15, like 5 if you're like beginning. Just think of 5 and be strategic about them. Like, one thing my Robinhood account is, one thing I'm trying to do is get any of my stocks that I trust. I want to get them to 10. So Tesla, I'm going to get it up to 10. Target, I want to get it up to 10 eventually. It's a nice dividend stock. I get paid quarterly or something like this with the Target one. Neo, I already got 10. That was recently. Robinhood, I might get Robinhood 10. Apple, I'll get 10. So for my private account, that's what I'm going to do. My public account, the public account is it's already narrowed down to a certain amount, and that one's already rolling good. So that's it for this video. Start with 10 or 15 stocks. Don't make these silly mistakes that other people make. I've made some of these mistakes internally. I'm glad I didn't do them externally so much, but some of them I did, and I'm glad it didn't ruin my taste for this, but that's because I only put in a little. I put in what I could afford. So that's that. Please like and subscribe. I'm trying to get to 50 subscribers to be able to live stream, please. And like, that helps. And then comment, make any comments, what you liked, what you didn't like. And just any curious questions. It could be about me as well, but just engagement is just nice. And I'm hoping you like this video. It's pretty long. So that's it. One Family Investing, Uneducated Yogi. We're out. Love and peace.